We're about 2/3 of the way through earnings season, and this week we're kicking off the media crush. CBS reporting tonight, Time Warner tomorrow. We're joined now by Benjamin Swinburne of Morgan Stanley. He's the #1 rated analyst on CBS, top ranked as well on Time Warner. Good morning to you, Ben. Tell me, Discovery Communications out this morning, they said they sold 30% more ads than they did same time last year. Is that a one company story? Should we be expecting similar narratives from CBS, from Time Warner?
Oh, good morning, Margaret, and thanks for having me. You know, at Morgan Stanley, we are clearly bullish on the media sector, and I think what you saw from Discovery this morning is both a indication of Discovery's success, but I think themes you're going to see across the broader media landscape. And I really would make three key points. The first being that advertising growth remains very robust. We had 13% domestic advertising growth for Discovery this morning for Q2. So you're not seeing a lot of advertising businesses grow double digits, and so television really stands out. Second, costs are basically fixed or growing very slightly. So we're seeing margin expansion across the board. And then lastly, media companies can access the debt markets very efficiently and very inexpensively. And what we saw today with Discovery, as we expected, is the company announced a $1 billion buyback authorization to help leverage that organic growth into even higher earnings and free cash growth. And these are all themes I expect to hear about with CBS and Time Warner as we move through the week. You expect
a possibility of buybacks on those fronts as well?
Eventually. Clearly, Time Warner is already buying back stock. They have been for a couple of quarters. I think CBS, as we move into 2011, that certainly becomes a real possibility.
You make the point that CBS, just the structure of the company itself, gives them more of a skew towards local than national ad revenue. How is that different? Explain to me that nuance.
Well, it's a little bit, from a revenue perspective, it's not very stark, but from a profit and growth perspective, the local businesses at CBS, their TV stations, their radio business, and their outdoor billboard business is really what's driving a lot of the earnings growth this year. I would highlight the TV station business in particular because TV stations are where you see the majority of political money going this year and in general. About 70% of all political spending goes to local television stations. So as a percent of overall earnings, CBS is the one who's most exposed to the political climate we're in. And as I think you probably know, there was a Supreme Court ruling earlier this year removing the caps on political spending.
Interesting. You found a good connection back to K Street for us, but CBS also signed a carriage agreement with Comcast that will give Comcast access to Showtime and some of the other properties there. What happens with the NBC merger there? How will that affect content?
Well, I think generally at Morgan Stanley we've been pushing a revenue story built both on advertising but also on overall pricing power for content. And I think the CBS-Comcast agreement really highlights the changing business model for the broadcasters. Historically, they were not receiving cash payments for carriage. That has now changed. And I think the fact that this deal was able to be done early, which is pretty unusual, tells you that in general the market has come to a point where everyone is in agreement about how the economics should move going forward. There's always negotiations about the actual numbers, but it's no longer controversial that the broadcasters are getting cash payment for retransmission fees. And I think when Comcast looked at NBC, that was probably part of their calculus.
Talk to me about how the model has changed in terms of how you analyze companies. I mean, we're looking at box office ticket sales down versus where they were last year. I mean, consumer consumption has changed. There's more at-home entertainment. There's mobile entertainment. You've got to change the models to account for that. I mean, how different are you analyzing things these days?
Well, it's a very good question, and I think the reason we generally recommend the media industry over the cable satellite industry is because we believe the content owners are in a better position over the long term to grow their business than the distributors. As you just highlighted, there is an increasing number of distribution platforms out there. You can add things like Netflix or Hulu that are all looking to sell the same content. So for businesses like CBS, like Time Warner, and the moves they've made with college basketball and Conan O'Brien, everyone's trying to build a big content library that they can then monetize, and I think we're seeing that play out in the numbers.
Content king. Thank you, Ben, for joining us this morning from Morgan Stanley.